Bitcoin just hit an all-time high and barely anyone noticed. At the same time, Trump reignites a trade war with 30% tariffs across Europe and Mexico. Volatility is rising, institutions are repositioning, and if you know where to look, there are still ample opportunities in plain sight. Late last week, Donald Trump confirmed plans to slap 30% tariffs on EU and Mexican imports, alongside increases on copper, semiconductors, and even goods from key partners like Japan, South Korea, and Brazil. The deadline is August 1st, and the message is very clear. Deal or face the duties, so to speak. Markets were slow to react. The S&P 500 stayed near highs, and the German DAX and European financial indexes took a hit. The reason? Traders are betting it's all just positioning, what some call the taco trade. Trump acts, Congress objects. But this time it feels different. Trump is signaling he's not actually bluffing. Behind the scenes and behind the headlines, volatility is picking up. Banks are projecting up to a 10% bump in trading revenues just from tariff-driven dislocations. That means higher volumes, wider spreads, and more event-driven plays for institutional desks. And now, here's where it really gets interesting. While headlines were focused on tariffs, Bitcoin quietly pushed past $120,000. No fireworks, no hype, just a silent and steady climb up. And this isn't mania, it's just institutional flow. BlackRock, Fidelity, OKX all report increased ETF and custody inflows. Google search trends were flat though, and the retail wallets basically dormant. So it's a new kind of all-time high, one led by allocators, not influencers. OKX's Europe CEO called it a digital gold moment, and that's exactly what we're seeing. Bitcoin behaves now more like a macro hedge, not a momentum trade. So putting it together, tariffs are weakening confidence in the US dollar, and the greenback is nearly down 10% year to date. Bond markets are sending mixed signals, stocks are high, but fundamentals are fragile. So institutions are reallocating, not just into crypto, but into gold, non-US equities, and tactical rates trades. So we're seeing a stealthy shift towards hard assets and global diversification, especially ahead of what could be a noisy August with Trump's tariff war. So here's what we're watching at the institutional level. Volatility trades and event-driven FX equity volumes are lighting up. And digital hedge rotation leads to Bitcoin and gold behaving like high beta complements. Cross-asset repricing leads to the dollar weakening, and this leads to global equity flows. Yield curve plays lead to tariffs flattening the curve if the Fed is forced to ease again. The market's sending mixed signals, but if you cut through the noise, the story is very clear. Realignment is underway, from tariff-driven dislocations to quiet institutional rotation into Bitcoin. At AutoTradeLab, we specialize in navigating moments like this through fully automated, AI native, and quantitatively driven strategies tailored for institutional capital. To learn more, visit us at autotradelab.com. Otherwise, hit the like button, subscribe, and comment down below what is on your radar.